Traders, investors, we have a special guest on today. We have Serge Berger on, who has a MarketFi product, the Steady Trader. Serge, how you doing this morning?
Hey, good morning. Good morning. How are you guys?
Good. So, Serge, you've got this Steady Trader, but tell us a little bit about your education, your background there, your market background.
Sure. I actually, my very first job was actually at Bloomberg, where I was an analyst in various equities around the world and things like that, and then really started cutting my teeth in this business on the south side of JP Morgan. I did a whole bunch of investment banking activities there, mostly focusing on the fixed income side, which was very interesting. It also really gave me a lot of insight into how the entire financial crisis unfolded, and being involved in the whole CDS trading and selling CDOs and trading them and all that stuff really kind of gave me a different perspective from it, sort of a front row seat, if you will. And a lot of money was lost on the institutional side there from our clients, and that really sort of got me thinking. There's got to be a better way of doing this. And I've been trading equities all the way along for at that point probably 10 years, and eventually decided start up my own company. Took a few clients with me and started managing their money and doing a lot of advisory business as well for family offices. Some high net worth people and retail folks in general. So.
And what do you trade? Do you trade equities, options, futures? What do you like to trade?
Yeah, so basically, after leaving fixed income, I found that the best sort of way for me to make money and from a lot of clients' perspective to what they were looking at was really equities. And equities more in a swing trading point of view, from positions sort of ranging from 2 days to multiple weeks.
Okay.
And of course there'd be options trades in there, but primarily the analysis would be based on individual stocks, and then we'll do the options trade around that analysis as opposed to the other way around.
I think you're in a great time frame there too. I love it that you said you're in 2 days to a few weeks, because I tell this other traders at Bright Trading there all the time, basically that our traders always had this scalper mentality where they're coming in, they're trying to make nickels and dimes here, and I'm like, you can't fight the computers here anymore. They've monopolized that space. But what you can do is just lengthen that time horizon a little bit. If you can get out, even to hours or to days, fantastic, because there's not a lot of competition in that time frame space. So I love the fact that you're coming in here and saying, your time frames are 2 days to 2 weeks or whatever, because I think you're in the sweet spot here. Have you found, is that the reason that you've went to this time frame? Is it for some of those reasons as well?
Yeah, that's exactly it. You're hitting it right on. Basically, this is sort of what I saw. So on the sell side, I saw a lot of people, a lot of the longer term big institutional guys, and even some of them, big money hedge fund guys, their time horizons was really more than a few weeks. On average, particularly the macro guys. So you have a very crowded space that starts at about probably 2 to 3 months and going out.
Right.
And then you have the day traders and scalpers and all that algo stuff in the middle, HFT, and it's just like it's like driving up and down I-95 at rush hour. It's horrible.
Yeah.
So you get into that sweet spot where there's a ton of trades setting up and they're not very crowded. So
yeah,
you're absolutely right.
So how do you find the stocks? Like, what are you using? Are you looking out at technicals or something, or are you waiting for setups? Like, how are you finding your spots and your trades?
Right. Yeah, basically it's a 3-step process. I do sort of take a step back and I make sure I understand. And this is a daily evaluation process, but it doesn't change a lot. It only changes a couple times a year. But you want to make sure you know where what the general market structure is. And when I'm talking about the structure, I'm talking about what's the general feel. Where's the market getting its read from? We are still in an environment. Yesterday was a perfect example of that. As Yellen started leaking out that speech he's giving today, everything's based on what the interest rate policy and monetary policy and just generally political environment is. So that changes over time. So that's my base case where I start out from. So right now, I just don't want to be short the market in this kind of environment. That's the first step one. Step two, I start looking for stocks that are doing the right things, that are behaving well technically. So if you look at a stock that's very gappy, like, take Crocs for example. Right now, it's probably gonna start gapping up and down a lot because of the news it had yesterday around some corporate events. So you want to find stocks that are then trading well technically. And then thirdly, my trigger point is using candlesticks. So I make sure I get a read on investor psychology on the actual trade setup, and for that I use candlesticks.
Okay, so you look at the entire universe of stocks. You don't have a group of stocks that you follow and you wait for the setups. You kind of scan the entire universe of stocks for your setups.
I have a pretty extensive watch list, and it's all divided up into sectors, right? And then so I look at the probably 9 out of the 10 S&P sectors, where I have, let's say, about 10 to 15 stocks each, and then on top of that, I have a watch list of just active things that are constantly changing. You got to trade in Facebook and this and that, and so yeah, there's definitely a watch list. It's divided up in different sectors, basically.
Now, do you scale into these positions when you find something with a nice setup? It's meeting your criterion. Do you come in and you buy it all at once, or do you scale in, or how do you go about actually, with your execution?
Yeah. I will say it depends, but on average, I just get in, right?
Just get in, yeah.
Yeah, I basically just get in. It'll depend. Like, there's always situations where you want to scale in if there's a impending news, but you want to start scaling in, something like that. But on average, I just get in when I get in. Same thing on the stop outside. There's stops placed, and I get out when I get out, and that's it. There's just no emotions involved.
What's your kind of risk return that you set? Like, do you have a risk return and ratio that you have in mind here, or how's that?
Yeah. Usually, because of the way the mechanics of the swing work, I try to go for gains of about 5 to 8%. So I'm pretty happy with 5 to 8%. You can always keep a trailing stop on and let it rip for 20, 30, 40%. But on average, I like to trade. So I do trades on a weekly basis. I like to just really hit, I'm more trying to hit base runs, just get for these 5 to 8%. And then stop outside, you try to do something like 3 to 4% depending on the beta of the stock is sort of your stop loss.
And you're obviously trading multiple positions at one time, right? In your portfolio. I know you said the market's been going up here. I mean, do you have any shorts in your portfolio as a hedge, or just technical setups in that, or are you just 100% on the long side now?
Right now, I actually just yesterday took off the hedge we had in the S&P puts. Just and I'm happy to put those back on today if we see weakness. But in general, I try to have positions in both directions. Right now, I think we have a couple shorts left, but it's definitely a two-sided. I definitely trade both sides of the market. I just think if you have a clear direction the market's trending in and you understand the structural environment, you're just better off. You have a much higher probability of trading in the direction of the trend. That's a very simple thing that we all know. It's another thing to actually do that.
And what was your trigger to take off? We had the weekday on Tuesday, or kind of a mixed day on Tuesday. We had the substantially lower open on Wednesday. Couldn't take out the pre-market low. What was your trigger when we didn't get follow through off the open, off the pre-market low, or was it a little bit later in the day?
Well, first of all, this hedge has been on for about, I think, 30 handles in the S&P. So I think probably somewhere near 1750. And I always set the stop out 1780. So very simply, I stop out. That's the rules. If you can't stick to my rules, I have no reason to do this business. We all know that. But basically, we just had a very clean breakout. Now, can we get a nasty reversal today? Absolutely. But at least I know I stuck to my rules. So.
And I think I agree with, I'm always one, it's rule-based trading, have your game plan before you go in, know your risk-return ratios. I always like the 2 to 1. I feel like a lot of my trades are just like you on that swing trading strategy. I really, I'm feeling, this is really good stuff that you're giving here, because kind of like the 2 to 1 risk-return and the time frame you're in the sweet spot there, Serge, so that's good. What stocks are you looking at right now? What's on your radar?
Right now, I'm looking at, if I look at my 1, 2, 3 step process, I look at stuff that's actually acting relatively strong. So, if you look at, you can look at the materials, for example. Yesterday had a great move. Look at Monsanto's breaking out, right? So you look at sector and then stock. You can look at some of the retailers started, some of the home furnishing. Look at RH as Restoration Hardware. Hewlett Packard keeps ripping higher. So tech had a great day yesterday. Then you look at something like Pfizer, PFE broke out 2 days ago. So you have a real mix in sectors, but within that sector, there's quite a good amount of selectivity. Look at the financials, for example. The XLF didn't manage to break to a new yearly high yesterday, but individual stocks like KeyCorp, KEY is this ticker symbol, is around power. So, I'm just looking for relative strength and making sure the sector's okay.
Looking at stocks breaking out to new highs too, I see.
At this point, exactly. Now, of course, that strategy will depend on where we're at in the market. Right now, we have no reference points to the upside in the S&P or any other market except maybe the Russell, which is a little bit off the year-to-day highs. But more or less, we have no reference levels on the upside. So you got to trade breakouts, or if you see really good support with high technical patterns, you can trade those as well. That's there for the taking too.
And with the Twitter IPO, there's been a lot of excitement, and I know it's hard to really get any fundamentals off that until they release earnings. But have you been keeping an eye on this stock since the IPO?
You follow the news just to kind of make sure you're not falling behind the curve too much. But basically, like we were talking about the time frame before. I have very little interest in trading something that has no trading history.
Yeah.
People that traded again, and keep in mind the time frame. I'm not intraday trading. Well, I do intraday trading, but that's with futures. That's a separate strategy. But for these equities, personally, again, given my time frame, I have zero reference points on the stock. There's nothing, right? So if you remember back Facebook, the thing just plummeted from whatever the opening close on the first day was at 42, 43, 45, whatever, plummeted down to whatever it went down, and there's no reference levels to focus on. So, to me, it's very important to have reference levels in terms of trading. So I don't trade Twitter. It's going to take me a couple months to make sure there's enough trading history, but I'm definitely following it.
Just one pattern that I've noticed in this issue, and it maybe will be poised to break it today, is it's had 4 lower highs since it started trading, made that 50.09 high, and kind of 4 lower highs, kind of had an up-day, down-day pattern, but looks like it's getting a little strength here. 42, busting above yesterday's high in the pre-market here at 42.87, so trading 42.83. See if it can sneak back into that 43 handle. So what kind of advice do you have for new traders out there, people that are looking to enter the markets?
Yeah, what I always tell my advisory base, whether it's their institutionals or any type of trader, and that it's really about being patient. And if you think you're going to come into this business, whether you're a new analyst to Goldman Sachs or you are just a home gamer, you got to give this time. It's about learning first and foremost learning get to know yourself, because you don't really know yourself in terms of emotions until you start trading or play some sort of sports, right? And once you can control emotions, then it becomes about patience, and that's you don't run into trades, you don't rush into trades. It's all about waiting for your setups, because if you have a system that works, and a lot of systems work, in fact, I would argue most systems work as long as you don't rush into the trades and as long as you actually stick to your game plan. I think that's really what I see. A lot of people have good plans, or systems, but they just fail to stick to their actual plans.
And so having the systems and the methodology that you follow helps you take the emotion out of trading. You know where your entries, where your exits are, what your targets are, and so that's how you eliminate the emotion factor in your trading.
Yeah, no, that's exactly it. And as I told you how I started building this particular strategy, one of the great things I found was, the candlesticks. Again, I don't just use candlesticks. That's a bit of a myth as well. You want to start using them in conjunction with other things. But, you can use specific technical analysis tools to really eliminate, for the most part, the emotions, as long as you get yourself to actually set stops. Right. If you can't get yourself to actually set a stop, then you have a problem. You need a third hand to someone actually place that stop for you.
Okay, so pretty much we can get your tone here that you're kind of been riding this bull wave, and perhaps get your outlook for the remainder of the year.
Well, I think at this point, we had such a clean breakout yesterday. We may, I think there's a decent chance that we actually give some of this back at some point over the next couple of weeks. When I do my rounds with institutional investors, though, across the U.S. and in Europe, I can tell you I hear very few people trying to actually reduce positions. So a lot of the guys I talk to, real money guys, they're in this. They're not going to sell stock before the end of the year, which makes me think that we probably have more to go on the upside here at the year end. S&P, maybe 1850, 1860 is a potential upside target. The only problem with that number is that a lot of people are focusing on it. So kind of the maximum frustration would set in the market would turn around below there. But I would say moderately bullish into year end.
Okay, Serge, tell us about this product that you have called the Steady Trader, this MarketFi product.
All right, so the Steady Trader is basically a trade alert service where I give away my investment advice that I also do separately for different types of investors. But this is just it's a month subscription based where they get all my trades in real time, all my analysis. I do a morning video every single morning, 5 to 7 minutes long, where I go through the market, 1, 2, 3, that process I talked about just now. Go through the entire portfolio, do the watch list for the day, and everything like that. So you get real-time trade alerts. I do webinars as well for subscribers, and they have direct access to me by message and by phone all the time. So it's been a lot of fun, and I'm looking forward to continuing it.
Okay, we've had Serge Berger on of the Steady Trader, giving us his outlook on the markets and talk a little bit about his product. Serge, thanks for coming on the show today. It's always good to get different styles and different opinions on the markets, and if possible, we sure like to have you back on again.
Sounds great, guys. Thanks so much. Trade them well.
Okay.
Thanks, Serge.